Hello, everyone, and welcome to the program Business Points on Global Television. I am Samuel Odi. Many thanks for joining. On today's edition, we'll be looking at the capital import and then the decline that shapes Nigerians' economic outcome. But before we get into that light, let me bring you up to speed with the current downside or deepening that the Naira has suffered just because of the fuel hike that we witnessed yesterday. The Naira continued its downward dip against the dollar at the foreign exchange market following another round of fuel price increment by the Nigerian National Petroleum Company Limited. The latest adjustment marks yet another spike in the pump price of the premium motor spirits this year. According to data, the Naira weakened significantly, closing at 1,625 Naira per dollar on the previous market day compared to 1,561 Naira, which was exchanged on Tuesday. This represents a depreciation of 63.37 Naira. This drop comes after the Naira had made some gains on Tuesday, appreciating by $73.39 against the dollar. And then moving on, then this dip now that Naira is suffering despite the gain that we witnessed a few hours ago. It's coming at the bed of the recent increment in fuel price. But questions are being asked. Crude for Naira. How comes fuel price going up? And then it is said by the federal government and some independent marketers that subsidy is totally out of the way. That's why the price went up. And now, why are we still having this current price now affect the Naira? So these are questions that a whole lot of persons are asking, and then we demand an answer to know why we're suffering this decline when we are now exchanging crude for Naira or buying crude for Naira here in Nigeria. So why do we still keep having depreciation in our currency? But with that being said, we'll be moving on. Let's look at the capital import and then the decline that has shaped the country, Nigerian economy. In the third quarter of 2023, let me just bring you up with the history, basically, of what has been happening in the capital importation space. Historically, Nigeria's importation has experienced fluctuations from 2021, basically from 2020 during COVID, because a whole lot of investment has been withheld and the investment flow has been pushed down, and it's just little. So globally, the global economy is facing a downtime, but what can be done to come out and then revive and come front of this, downwards in terms of business that a whole lot of countries and mostly in this part of the world are facing. So overall investment inflow purged by 45% to a $6.7 billion from $9.7 billion in the year 2020. So the first half of 2021 saw a 61% year-on-year decline to 2.79 billion compared to 7.15 billion US dollars in the first half of 2020. So on this note now, let's fast forward down to this present time where we are also still experiencing the same dip. Total capital importation into Nigeria stood at 654.65 million US dollars, lower than the US 159.67 million dollars recorded in the quarter, indicating a decline of 43.55. So there's been a massive fluctuation, and then the fluctuation has actually been on the dipping side on a year-on-year basis. So Nigerian government have now eased off taxation for oil deep sea investment. So now they are making this available so as we can have a whole lot of persons come and invest, foreign investors. So with this happening, there is also a negative effect on the FX markets, which totally is affecting the cost of living in Nigeria. So on today's edition now, we'll be extracting all of these angles and what can be done, not just reducing of tax. Is the environment, is the marketplace conducive for foreign investors who just want to come invest, instead of just taking away taxation from one sector and then leaving all the other sectors on a high. So we'll be extracting all of this conversation while I introduce my guests after this break, who will be joining us virtually. Please do stay with us. We'll be right back. Many thanks for staying with us. If you're just joining, this is Business Point on Global Television. So let's get into it. I'm set to introduce my guest, Mr. Eze Onyekwere. Good morning, sir, if you can hear me. Good morning, sir. If you can hear me, just thank you so much for joining us on today's edition of Business Point. Let's get right to it. Capital importation decline. We've been witnessing a whole lot of fluctuation in this angle. So, what does the capital importation? How does the capital importation rather affect Nigerian balance of payment and foreign exchange reserve?
Well, capital importation, to a great extent, is a reflection of investors' confidence in your economy, especially foreign investors who want to come into Nigeria. And we are not looking at capital importation only from the perspective of loans that are drawn down by the government. So people will like to come to the economy, and before they come into your economy, they will want to evaluate how your policies are going to impact on investments. It's going to impact on their capital and how much returns they will get, as well as how they can repatriate their money if they want to leave the country. So we are discussing things beyond fiscal and monetary policy. We are discussing the trade policy, the investment policy, the labor policy, the industrial policy, and even the state of your security and the rule of law. So yes, capital importation declining in Nigeria is no news. It's to be expected because all the things we are doing have not been so positive as to attract new capital into the economy beyond simply the drawdown of the borrowing that we have done recently.
Okay, so basically, looking at it now, the federal government has waived out taxes for deep sea oil production. I know in the light why that was done by the federal government was to open more room for foreign investors. So how key is it going to be now, given the fact that this taxation has been waived away? How key is it that we're going to experience massive flow of investors in the coming months, if possible?
I do not expect anything so massive because we are not the only ones who are reducing taxation and giving incentives, because there are other countries who are also oil producing that will be doing the same. I think we should have gone beyond the stage of begging investors and giving them very generous and incredible sums of money to take away if they do come. We should have reached a stage where we will have had the local capacity to mine the petroleum, to extract it, whether it's offshore or onshore, extract it, process it, and add value. And that's what is done in other countries, rather than to wait for the proverbial investor. Over 60 years since we started extracting crude oil, we are still waiting for foreigners to come in and we begin to share for 70-30, 60-40, or 50-50. It doesn't make sense. That's not the way to go. We need to get local capacity to begin to do these things, and it is not beyond us.
Do you think we have a healthy environment for foreign investors to even want to come in the first place? That is looking at the business space and then the Nigerian market generally. Do you think the environment is healthy for foreign investors who actually want to bring their money into Nigeria at this time?
I do not think so, because all the indicators we are witnessing, is it the macroeconomic uncertainties, the galloping inflation, the value of the naira that is losing value by the day, the relatively low purchasing power of the citizen who have become impoverished, the high interest rates in the economy, which is discouraging investment. So I do not see so much hope in any foreigner. Rather, we should begin some level of re-engineering, which will help us reposition the Nigerian economy for Nigerians in Nigeria, basically, and Nigerians in the diaspora. And then when foreigners want to come, it will be just some addition or a surplusage. But the basic work of building the Nigerian economy should be for Nigerians, and not hoping or dreaming that somebody from somewhere will carry tons of money and come and invest in your economy, when even your citizens do not express that confidence in the economy.
Looking at those, let's look at this other angle of infrastructural development and capital importation, the impact. So, what impact now do you think has importation, capital importation, impacted in angles of developing Nigeria's infrastructural sector?
You will ask yourself, the capital that is imported, for what purpose is it? Is it meant to construct roads, bridges, or infrastructure? Or portfolio investors who are coming to buy stocks on the exchange, hot money, or people investing in bonds? The capital importation you'll be thinking of, if somebody is coming in to build a new factory, or you have a public-private partnership where new roads, bridges, schools, hospitals are being built. So if you are simply importing money to buy treasury bills, to buy government bonds, to buy shares on the stock exchange, that's not the kind of stuff we are discussing. So it has absolutely no impact on the infrastructure. Unless we are doing diaspora bonds, unless we are doing bonds that are specifically targeting the infrastructure component of the economy and foreigners are subscribing and bringing in their money. But otherwise, it goes to no issues, got no clear link, no link at all to the infrastructural development in the economy.
Okay. Looking at this other angle now, because you saying it does not you made mention earlier about the policies. Are those policies actually reflecting positively in the light of having the Nigerian economy develop? And what, if not, what other policies can be put in place to be able to stabilize and then have this capital importation and then investors get into the country, even Nigerians too that are willing to still invest back home here?
Yeah, you have to rebuild confidence in the economy. And rebuilding confidence involves a holistic approach to economic engineering. And what do I mean by that? You have to recognize the link between your fiscal policy, your monetary policy, your industrial policy, your labor policy, your trade policy, even your policies on education and health. All these things have to become a holistic approach, reviewing all of them and making sure that each one complements the other. You cannot say you are fighting inflation, you want to reduce inflation. Every 2 months, you gather the monetary policy committee and you keep tightening and increasing the benchmark interest rate. And at the other, after you finish doing it 1 week or two, you now increase the cost of energy. You increase the price of premium motor spirit, increase electricity tariffs, which you know are so basic to service delivery, so basic to production of goods and services, that once you increase them, all the things you are doing about tightening and controlling inflation will not be there. So once you don't get your security right, there wouldn't be enough food that is planted and harvested for you to reduce food inflation. So that's why I'm saying everything should be seen as a package. Whether you are tightening the economy, or whether you say you are fighting inflation, or whether you are going to borrow. So you must put everything on that plate and consider it, see if you take step A, this is what is likely to lead to. So by the time you consider all of them in one plate, you are likely to arrive at a good policy mix that will help you to begin to have some level of macroeconomic stability and, of course, reposition the economy in such a way that Nigerians will begin to express confidence. Because you must get the local investors to be confident. Because when the foreign investors are coming or are looking for information, they ask the people already there, what are you doing? What is your experience? If some companies are folding up and getting out of the country, and somebody is trying to look in, definitely you ask the person who folded up, what was the experience? What led you to close shop? If I to know whether if he comes in, that same experience will confront him. So he cannot simply come in because of what you say, because you are the president or the CBN governor or the finance minister, and bring his money. He must ask questions. And there are all kinds of agencies from their embassies that are here, investment companies, experts who can always tell them the true situation. And most of the times when they hear the true situation, it is not something that will encourage them to come in.
Globally, the world is evolving, technological innovations and global dynamics happening in the digital space. Now, what impacts can the capital importation have on Nigerian technology and innovation, and as well as the ecosystem?
Now, you also remember that many of those who are having startups in the technological space are
Yes.
looking for angel investors. They are looking for investors that will give them money at very low interest rates, or more or less give them grants. So if there's no confidence in your economy in terms of your ability to reproduce and regenerate the money you are giving, to make some profit out of it, to grow it into an idea that will explode, then it becomes very, very difficult for persons outside their shores to import their capital into Nigeria to assist you one way or the other. So the negative macroeconomic indicators are having a real negative effect on capital importation for those in the tech space, for those who are trying to start something innovative. So definitely it is not in favor of the younger generation who are always the champions of new technological developments that should, in the long run, make Nigeria more competitive and increase the profitability of our enterprises, while at the same time making life much more easier for the population.
Okay, because that's actually a very major key. But how does Nigerian capital importation align with the African continent's free trade area, and how can it help, the younger generation, that is the startups now, in terms of technology innovations?
And we have a free trade area, which has created a very huge market where you have the opportunity not just to market your goods and services in Nigeria alone, but to the whole of the continent. So the more investment you have, whether locally or through capital importation, it helps to reposition the firms, particularly the startups, the younger ones. It helps them to get more capital and make them more competitive so that they can compete in the bigger African market. So there's a huge link. And so the diminishing capital importation is also somehow diminishing our ability to dominate the whole African market and to be able to compete effectively. So we need some new policies which will definitely spur local investments, make us more competitive in terms of attracting new capital from outside our shores, so that we can reposition ourselves to be a good team player at the African Continental Free Trade Area.
Okay. Are there opportunities for Nigerians to attract capital non-traditional sources? Like example now, China, India, though there've been a bilateral relationship between Nigeria and China, and we're hoping to see a good turnout from the visits that Mr. President Bola Ahmed Tinubu had, and conversations that they had with the Chinese government. So how key is it going to be for Nigeria to, attract from other regions, that's aside Asia, for other European countries? How key is it going to be that we attract more traditional sources?
But if you recall, this is not the first time a Nigerian president is traveling to China or to India or to Japan or to Europe or America. The problem is not about the travels. The problem is, what have you done well at home that should attract capital? What have you done well at home that will allow capital to get more profits when it comes into Nigeria? What have you placed on the table to make sure that if somebody trades in Nigeria and gets his money in Naira, when he wants to repatriate, he will find it easy to be able to take the money back to where he got it from? So these are fundamental questions, and the work is to be done locally. When you do the work at home, then it becomes easier to go out to market the good results from the work you have done at home. So for now, I don't see the possibility of people rushing into the country, because that good work that should be done at home, stabilizing the economy, reducing inflation, upping the value of the Naira, making it a good store of value, then once you're able to do all those things, then you're on the road to, even without the president going there, investors have embassies here, they will report to them what is happening, and they will gradually, one by one, start coming to Nigeria to make their investments, because there will be a good return on investments. But for now, the cost is not really clear.
Okay, you made mentions of new policies need to be in place. So, are there any recommendations that you have for this current administration and the CBN governor as we begin to wrap up, sir?
Now, I discussed something about the way we run our crude oil business, the oil sector. For instance, whoever is running that oil sector has no business being there because the person cannot deliver. Part of what we should be expecting is that new round pegs should be put in the round holes so that we can move away from 1.3, 1.4 million barrels a day to 2 million, 2.5 million barrels a day. And I told you we need to begin to have a more developmental approach to our oil and not just putting it away for anybody to come in and pick it one way or the other, all in the name of collaborations. So these are the kind of things I'm expecting. I expect more coordination between monetary and fiscal policy so that when you say you are fighting inflation, all the things you are doing in tightening will be complemented from the fiscal side. You know, you are not just doing something from side A, you are trying to stop the water from leaking. Somebody is puncturing a hole from the other side of the pipe. So that's not the way to go. I need to see more harmony. And then the government has to show itself to be committed to uplifting the standard of living of the people, not to continue introducing poverty, encouraging policies like the current and recent increase in the price of PMS. That's not the way to go. We need some harmony and stability in the economy.
Right. We need some harmony and stability in the company. Thank you so much, Mr. Eze Onyekwe, for joining us on today's edition of the program. We sincerely appreciate you for your time.
My pleasure.
Yes, we need more harmony and stability in the economy so as to drive more foreign investors into Nigeria and to close them and then boom the economy as we are in a dire state. Though globally, there's been an economic meltdown which has been since 2020 when Nigeria, the whole world got struck by COVID-19. As we wrap up, this is how much time will permit us to take on today's edition of Business Points. My name is Samuel Odi. I'll see you again tomorrow. Bye for now.